Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the most bullish scenario where we have a finished regular flat in a 3-wave A, a 3-wave B and a 5-wave C to the downside, hitting the common target area for a wave C, which is the 1-to-1 trend-based fib extension from the high to the low of A to the high of wave B. This low is now the invalidation for the very bullish scenario as we look for continuation to the upside, meaning that more locally we want to count a wave 1, 2 and eventually a bigger wave 3 towards the upside. The common target area for your wave 2 is the golden pocket to the 786, taken from the low to the high of this wave 1, sitting between 62.5k and 61.2k, and there is also some additional support in this area. First of all, the blue box, which has been hit here, 62.2k to 62.6k, and around the 786 we also still have a point of control of this structure here at 61.1k. In this scenario, we are then looking for continuation to the upside in a bigger wave 3, which should be the highest volume, most impulsive structure, so you definitely want to see volume increase as price is moving towards the upside. In the bearish but eventually bullish scenario, we are looking for a continuation of the range where that regular flat that I just mentioned, 3-wave A, 3-wave B, 5-wave C, is only a wave W. So it's a subwave structure of a bigger W, X and then a wave Y. Now this wave X here could be finished at the high over here. The only issue is that wave X then is incredibly short in time, and waves also relate in time, not only in price. So preferably this wave X is finishing after the 0.382 fib time, taken from the high to the low of W to compare W with wave X, and the 0.382 is sitting on the 2nd of May 6 p.m. Central European time. Now to end wave X after the 0.382, we have to think of structures that would work locally, and therefore this flat structure is very interesting. Looking for a 3-wave move to the upside in a wave A zigzag to the downside in a wave A, B and then a wave C inside this wave B, and then we want to count an impulsive move to the upside in wave C. The common target area for your wave B in an expanding flat, which is the most common flat taken from the low to the high of A, is between the 1.236 and the 1.38, which is between 57.7k and 56.6k. And there's also a little bit of confluence in this area, a bit of an order block on the 4-hour chart, so that is indeed nice. And then we look for a wave C to the upside where we want to take the high of this wave A. Now in this wave Y, we can have either a flat structure, a zigzag structure, or a triangle. We don't yet know, we don't have that information, but because wave W is a flat, wave Y can be either a flat, zigzag, or a triangle. So we have to be patient and see what price is going to give us. Zooming into this blue wave B, we're looking for a bigger zigzag to the downside, where then wave C is going to hit that 57k target. So we're looking for a 3-wave structure in a 5, a 3, and then a wave 5. The common target area for your wave B is the 382 to the 886 Fibonacci, taken from the high to this low at the moment here, giving you a target area between 64.4k and 66.7k. The reason that wave A has a higher probability to be on this low instead of this low is because of the structure that we have over here. If we count an impulse, 1, 2, 3, 4, 5, we can end the 5-wave structure here, but the 1, 2, 3, 4 and then a wave 5 becomes a bit of a problem because of this being a wave of 5. A wave 5 can only be an impulse to the downside, where wave 1 and 4 are not allowed to overlap, but in this case 1, 2, 3, 4, 5 we do have overlap between 1 and 4, so that is not allowed. And then the alternative is a diagonal 1, 2, 3, 4, 5, where we do want overlap between wave 1 and wave 4. However, this then becomes an expanding diagonal because 3 is longer than 1, 5 is longer than 3, and that is very rare unless all of the other stuff fails. And also in an ending diagonal, so ending a wave of 5 to the downside, we want to see 3-wave structures in all of the waves. So in an ending diagonal, we want to see a zigzag in 1, in 2, 3, 4, and eventually in wave 5. But on the lower time frames, these moves here to the downside look pretty impulsive and not corrective. So that lowers the probabilities for a finished diagonal over here, increases the probabilities that the current low that we have here is a corrective low, not an impulsive low, which increases the probabilities that if price does move towards the upside, we're going to see downside later for price to take this low over here. And that is also, of course, what we're looking for in this scenario. So if we put wave A over here, we are looking for a 3-wave structure to the upside to eventually go to the target area for this wave B. Now, potential wave 5 is not yet fully invalidated, right? We can still get a bigger diagonal. It is going to be expanding, but the probabilities nonetheless are higher at the moment. This is a corrective low compared to an impulsive low, looking for this low to be taken sooner or later, really. Now, if we go to the most bearish scenario, then we have a triple 1-2. So we have a 1-2 in red, looking for a very big wave 3, and then we have another 1-2 in blue, 3, 4, 5 in blue to finish the red wave 3, and then inside blue 3 we have the yellow count 1, 2, 3, 4, 5. Now this scenario has a lower probability, so the bullish scenarios on a higher time frame have a higher probability. Reason being, the 886 is touched for this wave 2, taken from the high to the low of wave 1. That is a rare target for a wave 2, common for a wave B or a wave X, increasing the probabilities. Any move to the downside is corrective in a wave C or a wave Y, and therefore increases probabilities to sooner or later take the highs and continue the trend towards the upside. Now, even in this particular scenario, locally we are still looking for price to go higher. Here we then have the same impulsive move to the downside for 1. We then look for a wave 2 to the upside. Common target for your wave 2 is the 05786, taken from the high to the low, 65k to 66.3k. The 382 is an uncommon target at 64.4k, which, as you can see, has not yet been reached. So locally we are looking in pretty much all of the scenarios for price to move higher, and if price does come down once more to maybe then finish a wave 5 and move the impulsive structures like a wave A, wave 1, also wave 2 over here, we are looking for a bounce. Now on the CVD divergences, we have bullish CVD divergences. The local CVD already played out, higher low in price, lower low on the CVD, which you can see over here. So on blue, higher low in price, right, lower low on the CVD, bullish CVD divergence. And if we zoom out, you can also see it on the 1-hour chart, higher low in price, lower low on yellow and on blue, which is a bullish CVD divergence. So the small one already played out. The target for the bigger CVD divergence is the highs over here. So if we then look at the probabilities of the different scenarios, then on the weekly time frame the probabilities remain higher for a continuation of the trend, bullish first, and then comes the bearish triple 1-2 scenario, which has a lower probability. On the 4-hour chart, the bullish scenario where wave C ends over here, or the bigger WX and then a wave Y, have a higher probability compared to that bearish scenario where we again look for the triple 1-2 to the downside. And on the 1-hour time frame, we are looking for a higher bounce, either directly move higher into the target areas, right, for the different scenarios, or first move down once more, take the low, and then get that bounce towards the upside. Now what you then read here as well is the current local low, as explained, has a higher probability of being a corrective low at the moment and not an impulsive low, and that increases the probabilities to sooner or later, after a potential bounce, take this low again. So we could still have an ending structure here for a potential 5, but then you want to take this low before reaching these highs here preferably, right? So in case price first moves up, the probabilities are higher to come down later and take this low at a certain moment. So first take the low once more, and then bounce is what we are looking for, or a bit of a continuation to the upside and a higher bounce, because by all means we first observe the bounce in both cases because the probabilities are higher for a bit of a move to the upside. And also in pretty much all of the scenarios here we look for a continuation to the upside in wave 3, or take the low and then continuation to the upside, right? In the flat scenario we are looking for price to move a little bit higher to reach the target area for wave B, so either directly or move down and then move to the upside for that wave B. And even in the most bearish scenario, it's the same thing. We're looking for higher directly or down and then eventually higher. So in all of the cases, preferably from an Elliott Wave point of view, we are looking for a bigger bounce to the upside, and then we'll take it from there. So I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.